What's up, guys? Welcome back. You already know we banging over here. Cheap crypto with great utility. It's gonna make us a lot of money. Keep in mind, I am not a financial advisor. Don't forget to subscribe to the channel. Stuff like this is important because you guys, you average Joes and you average Janes, and that you work hard for your money. And I want to make sure that you got your money in the correct play. All right. So follow me on this right here. This is tied into Ethereum and Matic. Okay. Here we go. Let's read the story. It's too important. I couldn't wait till tomorrow, so I had to bring it to you guys today. Ethereum gas fees have plunged to a 6-month low. Here's why. Gas fees on Ethereum blockchain have dropped nearly 90% over the past month. Here are some of the factors behind the fall. Gas fees on transactions costs on the Ethereum blockchain have dropped significantly over the past month. According to the blockchain's data dashboard, the average transaction fee on Ethereum is now $4.50 from nearly $45 a month ago, a whopping 90% decline. We're going to find out why. Okay? The average transaction fees are now at a 6-month low per data dashboard. The data is a 7-day moving average. 7MDA, that's what it stands for. That's the acronym, meaning it is the average of the last 7 days and indicates a short-term trend. I think you guys know where we're going with this. Let me keep reading. So why have the gas fees declined from a record high just a month ago? There are several factors at play. I think you guys have been following the channel for a while, already know where we're going. First, there has been a notable drop in Ethereum's transactions in the recent weeks. Both decentralized finance, DeFi, and non-fungible token transactions have declined with the recent market crash. Daily transactions on Ethereum, for instance, have fallen about 1.2 million versus 1.65 million a month ago. NFT transactions and volumes have also declined per the blockchain data dashboard. Another factor behind lower gas fees is the growing usage of layer 2 scaling solution Polygon, formerly Matic network. The number of transactions on Polygon network has increased by a notable amount in the recent weeks. From about 1.5 million daily transactions on Polygon are now nearly 7.5 million. Wow. According to the tracker Polygon scan, that is over 5 times more than the number of daily Ethereum transactions. So this is what I was talking about in some of my Polygon videos, right? So Matic is basically, like I said, they're adding assistance because we know that Ethereum, the proof of stake that it is, it's just big and bulky and doesn't move good in tight spaces. Okay, we're going to make a lot of money, so we need Ethereum. Basically, like I said, it is the app store. Nothing moves without Ethereum. It is the Google Play Store. Everything moves basically mostly on ERC20 tokens. So it's just quite natural that that Polygon is going to spike, and it's spiking, is doing pretty good right now. But it's only natural that Ethereum is doing well because it called in the big dogs. Like I said before, this is the reason why I pump Seller, because Seller is a I think it's a Web3 layer solution on Ethereum blockchain that's adding support for Ethereum and also Polkadot. Okay, that's the reason why I love Polkadot, right? You can also stake Polkadot for 12% on Kraken. That is amazing. All right, so let's keep going. Polygon is a proof of stake blockchain versus Ethereum, which is currently a proof of work blockchain, although it is set to shift to a proof of stake model in the future. Remember what I was telling you about, Ethereum is programmable so that you can change it up. So I think big things is on the way for Ethereum. I do think that it's going to flip Bitcoin in market cap because I think that the whales are definitely headed to Ethereum. They're hell already in it. You know what I mean? Big time, baby. So Ethereum is a great project and great token to hold. It's a great store of value. You know, they say Litecoin is like the silver, but quickly it's like Ethereum becoming the new silver. Okay, so let me continue. Before I leave this, stop this article in this video. Okay, the proof of work model transaction processing capacity is limited, thus the higher fees in general. There are other pros and cons to both models. One thing, however, is certain: the demand for scaling solutions is rising. Polygon remains one such popular solution. As the block research reported recently, there are more than 350 DeFi projects in Polygon's ecosystem alone. Lastly, the increasing usage of Flashbot transactions is another factor that has contributed to lower gas fees. Flashbots let traders communicate with Ethereum miners off blockchain like a private channel to execute transactions. This reduces the number of spam transactions on chain and thus lower gas fees. In other words, fewer bots try to bid the highest gas price for transaction priority. Guys, this is huge. This is huge not only for Ethereum, but it's huge for us Matic holders. This is the reason why I talk Matic. I hold Matic, you know what I mean? And I know that once the lights get cut back on, I'm thinking like, you know, like the mid-July of this year, 2021, because, you know, we have the futures contracts ending on Ethereum and also Bitcoin on June 25th. So that's going to play a huge role, because after they basically settle up with those contracts, they're going to wash, rinse, and repeat. And then, as we see in my other previous videos, I was telling you at the beginning of future contracts, you know, when they put them out, basically they put them out in quarters. We're about to get into the third quarter, and they're going to do the same thing, because this is what whales do. This is what Wall Street does, guys. Okay, so keep in mind that I'm looking for great things for all altcoins and this space, this cryptocurrency blockchain space in overall in mid-July. Okay, so do not drop your bag, because I will pick it up. I love you guys. Stay safe. And until the next video, Average Joe out. Peace.